I'm Keith McCullough, and welcome back to another Real Conversation. I'm quite looking forward to this one with Michael Saylor. Michael, thank you for taking the time to walk through your thoughts on Bitcoin in particular, economics, fully loaded, asset allocation. I think we got a lot to cover.
Thanks for having me, Keith. Happy to be here.
Yeah, for those of you that don't know who Michael is, his bio, just is a rock star bio. He's made a lot of money, and now he's putting a lot of money into a certain thing that he obviously considers an asset class. It's an interesting journey you've been on, Michael, and it's something that I think people get pretty emotional about a lot of things these days. But when it comes to my job, I think a lot about asset allocation. I think a lot about the things that you've talked about, which is actually the volatility of the asset class. And that's what got my attention. That's why I wanted to have this discussion with you, because you were one of the first people to not only articulate it within a framework, but also talk about the volatility of the asset and maybe the flow into and out of the asset and the attributes. So that's where I wanted to start. I think I wanted to also go back and you like me. I'm obviously not as widely exposed to this as you, but you like me back in 2013. Just looking at a tweet, I look at people highlight all my tweets now. Anything I ever said about Bitcoin, which I've said a lot of things like this a long time ago, and I don't know if you can see that, but again, to be where you are today. Back versus then in 2013, or any bloody tweet that I have going back to the beginning of Twitter, one would say that you'd probably be dogmatic if you maintain that view. But just for you to get from there to here, if you maybe want to start from a non-believer, I guess, to where you are today, I think that would be really helpful.
Yeah, I'd be happy to. Look, Keith, if you roll the clock back a decade, I was always a big tech investor enthusiast. So I wrote The Mobile Wave back 2011. I published it 2012. And the theme of the mobile wave is that Apple, Facebook, Amazon, and Google are going to eat the world. And that's because all the things that we have in our life that are physical are dematerializing onto a software network. Apple ended up dematerializing all your mobile devices. Google ended up dematerializing every library and every piece of video. Facebook ended up dematerializing our social relationships. Amazon ended up dematerializing the storefront. So if you bought those, and I did, I bought a lot of Facebook and Apple and Amazon and Google 10 years ago, it's been a good run. And I think everybody today understands that. Mm-hmm. I think I would say that I did not understand Bitcoin, and Bitcoin is a thing where you don't understand it until you do. And I think everybody that encounters it, their first reaction is, well, it's kind of a tool for gamblers and hackers and cyber criminals and anarchists and the like. And that was the prevailing narrative back then. And what I thought was, yeah, eventually this will get shut down, just like online gambling. And I'd seen what happened with trade sports and the online odds makers. And by the way, I thought they're really cool, but I just noticed the regulators shut them down. So I said that when Bitcoin was $111, and then I ignored it when it went through $1,000, and we bought it at $1,111, $11,111, a lot of it. But what I'd say, Keith, is better late than never.
Yeah, big time.
A lot of people said, Warren Buffett missed Apple. Warren Buffett missed Apple for 8 of those 10 years.
Yeah.
And then he must have made more money on Apple stock in the last 20% of that run than he made on any investment in his entire life. And he probably made it without even noticing he made it. Because ultimately, the thing about technology is figure out the thing that's going to eat the world. If you're right, own it, hold it, and wait.
Well, that's how you became a billionaire. Like, just to put it on the table, you started your own company, you built it, and you owned it, and you held it. Right? There are a lot of different ways to do that. Your ability to buy as much Bitcoin as you did was built on the same belief. Right? I'm going to build something that people don't quite believe yet or understand, and I'm going to hold it.
Look, Keith, I think there's 3 ways to make money in this world. You can make something, you can trade something, you can own something. Okay, so I started when I was 24 years old making something, and I've spent 30 years of my life making business intelligence software. Let me tell you, it's really hard to make things, and you have to be the best in the world at that. And if you are, you know you are. So you can normally only do that in one place. after I made a modicum of money, then this question, do you trade it or do you own it? People that know how to trade stuff, I respect them. I just can't do it. I mean, you have to be dedicated and committed and understand it. And it's very complicated. So I'm not a good trader. I once tried to buy call options on Apple. And, I knew Apple was going to eat the world. I thought, these guys are going to have 1 billion people doing everything. I bought Apple stock and I made 10x, 20x my money. And that was good. But on the other hand, when I bought the call option, I bought 18-month leaps. And Keith, I timed it exactly wrong. And can you believe you could lose money buying call options in Apple in like 2014? And the lesson I learned was, if you believe in something, don't try to time the market. Just buy as much as you can and wait, because the market will disagree with you, maybe for a year, maybe for 2 years, maybe for 3 years, and they'll outrun your options. But I didn't think I was going to be wrong over a decade. I'll tell you one other funny story. I bought 500,000 shares of Facebook at $12 a share back, 2012. Okay, and I think it was an employee that sold it to me. Now, the biggest investment mistake I made of my entire life was selling that, any amount of it, at an obscene profit, And I look back and I'm like, the stupidest thing I did is I should have bought more, but I should have never sold it. And Keith, if you go back to 2012, we could debate, should you buy Facebook stock at $12 or $13 a share, or $10 a share, or $15 a share? What does it matter? It doesn't matter. And the truth of the matter is, if you had bought Google, Apple, Amazon, or Facebook at any point between 2010 and 2020 for 10 years, I think it's impossible to have lost money at any point for the decade. I mean, you would be hard pressed to find that point. And so your investment mistake would be, try to time the market on those things, because I can't figure it out. I mean, I've been wrong trying to time the market. On the other hand, it was pretty clear that Facebook was going to eat the world. I mean, they basically created a software network to pool all the social energy on the planet. And that takes us to Bitcoin, right? Why do I like Bitcoin today? Well, we're 10 years late on Facebook, Apple, Amazon, and Google. At the point that 20-something people look at me and they tell me how great an investment. When my niece told me she was buying Apple stock in the year 2020, I was like, okay.
Ahead of the split.
Well, I'm not, they figured it out. After the split, she's buying, and after Warren Buffett bought it, after the octogenarian bought it, my niece is buying it after the lockdowns. I'm like, okay, I think I missed that boat. On the other hand, here's the thing I think about Bitcoin. Bitcoin is the first software network in the history of the world that can pull monetary energy. So these Bitcoiners have figured out something that is really a thing of beauty and extraordinary value. They're pulling pure monetary energy on a network. And if I take $100 million and I put it into Bitcoin, it could sit there for a decade, like in a battery. It won't bleed out. You're not losing 2 to 4% a year. And I can put it in the palm of my hand, and I can move it around the planet for a few dollars in a few minutes. And we've never in the history of the world figured that out. And so it's very early on. I like monetary. I like software networks that are worth more than $100 billion, that are 50x bigger than their competitor, that are going to eat the world, that 99% of the world doesn't agree with me on. So in fact, I like the fact that people don't understand it, don't agree with it, are afraid of it, because I couldn't afford to buy it if they all agreed with me. Yeah. And I believe we're at that inflection point for Bitcoin where it's big enough to be unstoppable, but it's still new enough that there are 10,000 billionaires or billion-dollar entities, and maybe 5 of them get it. Maybe 10 of them out of 10,000 get it. And so the catalysts are all to the upside. And most of these risks, they've been worked out over the last decade. You could make a list of 100 things that might go wrong. we've watched them all happen. They haven't killed it. And we're just sitting right at the cusp of something really fabulous here.
Yeah, the debate on buy and hold, by the way, I mean, that's not something I'd really have any care to get into. I mean, that's an age-old debate. You know, when somebody says they're a bad trader or they can't trade around things, I believe them. You know, I built my whole career on having the ability to say the opposite to that. I mean, a lot of the things that I've owned, including the company that I built, I don't know. I don't know what it's going to be, as I'm sure you would agree. In 3 to 5 years, it's not what it's going to be today or tomorrow. I mean, what I don't know, but what I actually own and risk manage around, whether it be my company or any asset for that matter that I care to traffic in or allocate my hard-earned assets to, you know, these things are widely unknown. So for me, this discussion has a lot to do with that. Like, educate myself like I've tried to on literally any asset class that exists that trades with a certain level of volatility or not. And that's what I want to do, you know, for the rest of my life, is just continue to educate myself on what I don't know. Because I actually do think that, you know, timing is doable. It has been. If it wasn't, then I wasn't able to buy a bunch of Bitcoin in April and May from people who ostensibly didn't know what they were doing. So that's a question I have for you on that. Like, is there, like in any, because I'll cede your point, it's an asset that you want to hold, and people don't understand it. There's no need to trade around it because that's how you roll. I like core positions that I trade around because that's how I roll. But if it is to be what you believe it to be, which is a reserve asset, you know, what kind of volatility characteristics, you know, are you observing, and would you need to continue to see for that to be true?
Well, Keith, first of all, I think that the historic knock on Bitcoin is it's highly volatile. And for the first 10 years, there are lots of volatilities that took place. But I think if you look at the last 90 days and the last 3, 4, 5 months, if you're looking at this, every single day, I look at the 30 years, the 30 treasuries and swaps. I look at 10-year treasuries. I look at the NASDAQ, the Russell 2000. I look at gold. I look at silver. I look at Apple, Amazon, Facebook, and Google. Mm-hmm. And then I compare them all to Bitcoin. And I got to tell you, Keith, like, my unscientific view is on every single day, at least half of those assets are more volatile than Bitcoin. And on a lot of volatile days, I've seen 80 to 90% of them be more volatile than Bitcoin. So I think there's a historic narrative / belief. People think they know this is volatile, but in fact, it's not looking that volatile to me over the past 3 months. And I don't think over the next decade it's going to have the same characteristics of volatility that it had over the last decade.
On that, by the way, like, that is something that we can, if you don't mind me interrupting, like, that's something that we can measure and map and do daily, like across durations. Guys, throw up the implied vol table if you want, which I include. Interestingly, you made the point on Apple vol, Microsoft vol. You know, these things are wacky tobacco vol. I mean, Apple volatility is at 50. You know, for people that don't know what volatility is and they just need a mousetrap to kind of, you know, compartmentalize the thought, the VIX today is trading in the high 20s. Apple volatility is double that, right? So again, you're right. I mean, you've seen volatility. What happens with volatility, as you know, is that when something goes down, it starts to realize volatility. The Bitcoin volatility actually looks a lot like gold volatility in the last 90 days. So your observations are an empirical fact.
So Keith, I think you and I both agree that the monetary supply is expanding, and it's probably going to expand at double the rate it used to be expanding for the past decade. And that's stampeding a lot of investors into a store of value. So I think the Fed crowded everybody out of treasuries and sovereign debt because you're looking at effectively zero yield. And if you expect the monetary supply to expand by 15% a year, 10 to 15% over the next 3 to 5 years, then that means that a 5% yielding bond is negative 10% asset return. And it means that, you know, it means that I got to go somewhere. So am I going to go to big tech, or am I going to go to gold? NASDAQ is $10 trillion and it's big tech, and gold is $10 trillion. And I look at, you know, Apple is like emblematic of big tech, but between you and me, we both know Apple is more volatile than Bitcoin for the past 3 months. And there's $2 trillion looking for a store of value. People are literally using Apple stock as a store of value because it's deflationary. Apple's buying it back, and they think Apple's not going anywhere, and they're desperate to flee currency. And so I get it. I know Apple. I can buy $1 million of Apple. I buy it. It seems to work, but it's really volatile. So if people are buying Apple and it's volatile, and then they're not buying Bitcoin when it looks less volatile, again, you would do all of your readers a big service, Keith. And I would love if you did this, because the Bitcoin analysts don't do this. The crypto analysts don't do this. They calculate volatility of Bitcoin against Tron, Chainlink, Ethereum, and Tether, and EOS. But there's $250 trillion of assets that own gold, technology, and bonds. What we need, Keith, is a one page that shows the volatility of Bitcoin versus gold, silver, Apple stock, NASDAQ, Russell 2000, Dow, bonds, 30s, 10s, etc., versus Bitcoin on a 90-day and a 30-day and maybe a 6-month trailing average.
Yeah.
And then when you get up, you get to decide, is Apple your store of value? Is NASDAQ your store of value? Is gold your store of value? Is Bitcoin your store of value? Everybody can have their own opinion.
Right.
I just happen to be of the opinion that Bitcoin is the Facebook of monetary systems. And and everybody thought, Facebook, what is this thing? It's worth $10 billion in 2012. Why would anybody want to buy this thing? And I thought, well, maybe because 1 billion people will use it. And I think with Bitcoin, well, what happens, Keith, when a billionaire shows up with $1 billion and wants to drop it on the Bitcoin network? How many billionaires can drop $1 billion on the Bitcoin network before this thing becomes substantially more interesting and more valuable than Facebook? Because as I said, nobody ever brought 1 billion friends to Facebook.
Yeah, they could bring a lot more than $1 billion if it's going to be what people believe it to be. And by the way, I love a great story. I mean, the gold story's been around for 5,000 years. It's a great old story, but it doesn't mean I own it in size at every single price. I don't want to go back into I'll own it core. I'll trade around, the risk of it. The thing is, if it is to develop the attributes of something that's why I wanted to have this conversation to begin with. It had nothing to do with kind of the background, trolling of the discussion on Twitter. It actually has to do with just that. Is it a core asset allocation, and how big is it going to be, and what is it going to replace? These things, again, you have to have a volatility assumption, because you made this is a very good point that you made here, and you were using the Tron point, and I don't know shit about Tron. I mean, and if people think that that's he doesn't know anything, that's fine. I already ceded the point. I don't know what the fuck that is. But again, you're talking about the flow into the pond as opposed to the ocean that is asset allocation. Like the ocean, forget $1 billion. You could, if you had the pension fund of any major state allocate, 100 billion. The system wouldn't be able. So what we have to do is make that case. I think. Like, can it be that? And what would be the things that you would look for to establish that flow?
Let me tell you why big tech is not a good store of value over the long term, and why gold is not a good store of value over the long term. Let's start with big tech. Apple's fine, but when Apple's P to E goes to 100, and then 500, and then 1,000, at some point, the CEO of Apple is going to print more stock, or he's going to buy something with it. And the way that you destroy companies is you do dilutive acquisitions. Right. So the truth is, Apple stock is not scarce. The executive team can and will eventually print more. And if that doesn't dilute you, then they've got regulatory risk, competitive risk, execution risk, a lot of moving parts, right? And maybe the Chinese government takes a different view toward Apple, just like the American government takes a certain view toward Huawei, right? So that's why they're not good over the long term. Are they good stores of value over 1, 2, 3, 5 years? Yeah. Over a decade? Not so sure. Over 100 years? Absolutely not. Now, why isn't gold a good store of value? By the way, people make fun of me for talking about 100 years, but there's nothing in Western civilization that we really cherish that isn't 100 years old. Mozart, Beethoven, cathedrals, the country, our cities, right? There's if you really care about something, you look out 100 years, it clarifies all the noise. Now you back up and you can see why you don't want to store all of your money in an equity. Now let's go to gold. If you put $100 million into gold and the gold miners print 2 to 3% more a year, let's say 2% more, well, over 100 years, you lose 88% of your purchasing power. Now, why did that work in the past few hundred years? Because gold dilutes 2% a year and the economy grows by 2% a year. So roughly the power of what you can buy with gold as you mine 2% more a year in a 2% expanding economy is the same. That's one reason it worked. The other reason it worked is we had no other option. There's no choice. Yep. Welcome to the land of no choice. So in the year 2020, you have a choice. You have a digital gold. They can't make any more. Bitcoin miners are the friends of Bitcoin owners. They're not the enemies of Bitcoin owners. So bottom line is, you want to store $100 million for 100 years, you put it in gold. Under the best case, you'll lose 85% of it. Under the likely case, you'll lose it all because the bank will fail, the country will fail, somebody will seize it, or someone will enjoy it. The reason that the Bitcoin maximalists, the cyber hornets, if you will, the reason they're passionate and religious about this is because for the first time in human history, you can take all of your wealth and your life force, you can put it into an asset, you can keep the keys, you can take custody of your $1 million, your $100,000. No government, no bank can take it away from you. There's nobody to tell you you can't own your life force. And if you have hopes and aspirations for your family, for your religion, for your life, then you have the power to achieve those hopes and aspirations without asking the permission of a bank or a government or a politician. And if money is energy, right? And this energy is going to last a long, long time. Energy is essential to life. Bitcoin is about immortal life. It's about achieving your hopes and aspirations for as long as you can conceive of them. Now tell me, you think you're going to love Apple stock or gold or silver bars or bonds or municipals the same way as that?
I don't love anything. I mean, when it comes to assets, I mean, other than my own company and my family, I mean, it's not like, I guess that's the one difference that we have here. That's a beautiful story, by the way, and it sounds like
you're a traitor, Keith. Could be true.
No, I could be. Keith. You can call me whatever we want. The reality is that that beautiful story does get interrupted through the other side of the trade, and that's actually, we can't just at the same. And I do appreciate that you said what you said, which is, wouldn't it be powerful and really empowering to give people the actual data? Which we do, by the way. We also include inverse correlation data, which absolutely matters to Bitcoin. So when we're talking about the volatility of Bitcoin across durations, we're talking about the implied and inverse correlations that are currently existing. Even though that story is a beautiful one, this other one won't cease to exist immediately. And we do have to deal with what we call, dollar up or quad 4. And those are days where people that do believe that, like, look, I'm not sure if you know what quad 4 is. I think it's pretty straightforward. But the reality is that we backtested that economic circumstance. Because again, no matter what your life is, the one that you love or you don't love, quad 4 is when both growth and inflation are slowing at the same time. The only time you're going to lose money in Bitcoin is in quad 4. That's a back-tested fact. It might change. It might not be a fact that everybody likes because it stirs up hornets or whatever, but I don't love or hate that, right? There are 3 different economic scenarios out of 4 where I know I'm going to make money being long Bitcoin, and that's awesome. You know what the only other thing that has that attribute, the major one that you've mentioned? It's tech, big cap tech. Big cap tech, the only time you could lose a considerable amount of your assets, a drawdown, which I think most humans should be aware of, is when you have those quad 4 deflationary conditions. So that's one thing that I just wanted to submit here today. Like, is that something that people that are, romanticizing about the story, like, are aware of? Fundamental. I think it would be good for them to be aware of that, because at least they'd buy a lot more of it at the time when they could get a lot more of it at a lower price.
Well, Keith, I'm glad there are traders in the world, and I'm not a trader. But if there were no traders in the world, there would be nobody to sell to me when I want to buy. So I want people to do that, and I appreciate it. But having said it all, let's go back to the year 2012, and let's talk about trading Google, Apple, Amazon, and Facebook. And at the end of the day, The only mistake you could make is be short any of them. At the end of the day, Amazon crushed 15,000 retailers and Google crushed 10,000 different entertainment companies, and Apple destroyed 10,000 different device companies. And so there is one asset in each of those markets that destroyed everybody else. If you picked the one asset and you bought it at any point in the decade, you were a winner. And if you sold it at any point in the decade, you were a loser. So, the difference is, when you talk about trading soybeans or corn futures or wheat or oil or whatever, these are commodities and people make them and the price goes up and the price goes down. And if you time it right, you make some money. But when we're talking about a software network that's going to change the life of 1 billion people and dematerialize $1 trillion of energy, the only question is that one the winner? And Bitcoin is the winner of the crypto wars. It defeated 6,500 different crypto competitors, and it has risen out of those wars to be the dominant crypto asset network, just like Amazon defeated every retailer in cyberspace, just like Apple defeated everybody in mobile space, just like Facebook defeated everybody in social space. You have a chance to buy and own the winner and just wait for the rest of the world to recognize it. And, you tell me, is there any winning trade of Facebook or Apple or Google or Amazon stock in the year 2012 that's better than the trade of buying it?
Well, it depends on what,
when I look at it,
it depends on what you're looking for. It's not like, there's making money because you have none. And there's that, that I get that. You can't afford to miss this. Because if you miss Facebook, you're an idiot, But then once you have money, there's risk managing the money that you have. Like, I would say that a low volatility asset class that I own a shitload of and consume it, it's very liquid, is wine. It's standed the test of time. If you choose the right vintage and hold it, you can hold it and drink it and enjoy it thoroughly. There are a lot of different ways to do this. This isn't just like there's one idea that can change the world. Therefore, if you took my wine away from me, I'd hate my life. That would suck. That's my life, right? So from a libertarian's perspective, I think there are a lot. For me, what I'm really trying to find is the place for, which I have found, by the way. I've found a Bitcoin as an asset allocation in my portfolio. It's not all of it. And I don't know why it has to be all or none, and I wonder what your thoughts are on that. Because in addition to my company's equity, my wine, I do. There are times to own a lot of gold, and there are times not to. That's actually the lesson that I'm trying to at least engage people in with Bitcoin specifically.
So Keith, all the guys that have more money than God in this world, right? They have it because they bought or owned or created a technology that changed the life of 1 billion people. And so I don't think you're going to get 1,000x your return on buying a nice Chateaubriand or whatever.
Absolutely not.
If you could show me, if you showed me a sugar cube that you could produce 1 billion of and give it to people, and for the rest of their life, they would be perennially happy with no health issues, I would say you should invest in that wine network. But what we're talking about here is a monetary network never before in the history of the world created at the beginning of the S curve. If you buy at the beginning of the S curve and you're right, then you're going to have an extraordinary return as an investor. If you buy at the end of the S curve, maybe you'll hold some value. Look, let me ask you one more question. Say you actually wanted to take $1 million and you wanted to put it in an investment and give it to your daughter or your granddaughter in 30 years. How would you do that? Like, how do you pass down a material amount of money to your granddaughter or your daughter in 30 years? Because I can't do it with real estate in Florida. They tax it away from you in 30 years. I can't do it with any stock because I don't know the stock won't get destroyed in 30 years. I can't do it with gold because it's going to be cut in half and maybe seized by someone in 30 years. I can't do it with a bond and I can't do it with currency. With Bitcoin, because you can't make any more of it, you've got this pure piece of financial energy. You could buy it, you could hold it for no carry cost, and you would be able to hand it to someone in 30 years. So the magic of this is, for the first time in human history, we figured out how to send money forward in time 10,000 days without losing it. It's a magical thing. By the way, if I give you a battery, if you put $1 million of electricity in a battery, it bleeds 2% a month. You lose 24% of your energy in a year. You can't do it with a battery. The gold battery bleeds 2 to 3% a year. We've got a battery that doesn't bleed energy. It's a magical achievement. Nobody in the history of economics ever created a closed monetary system that respects the laws of thermodynamics, and it doesn't bleed off monetary energy into the atmosphere. I mean, how is that not something that you would want to put some amount of monetary energy into to protect for the future?
No, it sounds like exactly what you should buy when you're in Quad 4, when it's for sale. I mean, that's because the energy, and again, and that's actually the way we think about gold as well. I mean, it's labor plus energy equals gold price. I mean, that absolutely is the way to think about it. I mean,
okay.
So when we look at, when we think about, these things and we try to just say there's just one thing, I don't think that the market is actually giving you that message. Guys, can you throw up the inverse correlations just because, again, I think it's an important lesson. Why is it that Bitcoin got crushed in Q4 of 2018 and again in Q2 of this year? It's because it has an extremely high correlation to the currency it is debasing. You can't unlock these two things and say that you're going to be blissfully unaware of these realities, or you're just buying at a high price all the time. You're chasing it. And a lot of people chase Bitcoin. Keith, you could buy it a lot. You can be a lot smarter buying. I'm not refuting what you're buying. I bought a shitload of it, right? I mean, I'm equating it to how I think about wine, which is, I bought a lot of it. But I'm not going to sit there and just romanticize and not understand that the dollar, the other side of the trade, which it's replacing, doesn't have a huge immediate and intermediate term impact on the price of the thing you're buying.
Okay, so Keith, I have a comment on Quad 4. First of all, there's a group of people in the world that you trade with that believe that inflation is equal to CPI, and therefore you can define a Quad 4. There's a group of people that I align with, the Bitcoiners, that believe that the true inflation rate is not CPI, but rather it's the asset inflation rate. It's the rate at which the long bond or the T-bill or equities have been moving up for the past decade, or the expansion of the monetary supply. So if you focus on inflation as CPI, it's 1% or less. If you would focus on inflation as the monetary supply expansion, it's 15%. And I actually think that the inflation rate for the past decade is 20%. If you look at the cost of a 10-year bond that yields $50,000 a year in interest, it went from $1 million to $10 million in 10 years. That's 22% inflation. So there are different, over the near term, if you're trading with people that buy into your CPI definition as inflation, then that works. But if you're looking over the long term and you're trading with people that actually buy into the asset inflation rate as the inflation rate, you come to a different conclusion. Well, my last point is, in the near term, Keith, these things work. But over the long term, adoption makes sense. All of your arguments about why you should short Facebook in 2013, they're all wrong. Facebook's trading at $280 a share. They're all wrong. You should have never sold it ever, ever, ever. Now, what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce, we bought it, we're not ashamed of it, we're going to buy more? Mm-hmm. All your models are destroyed, completely devastated. Bitcoin goes to the moon, because what really matters is, with Facebook, does it work? Do 1 billion people use it? With Apple, do they buy it? With Google, do they use it? With Bitcoin, will they use it? All the near-term trading models, they'll work for 90 days, 30 days, whatever, as long as everybody else in your trading universe sees the world you see it. But over a decade, over 20 years, over 30 years, the laws of thermodynamics are going to kick into place. And it's pretty obvious Bitcoin is a better long-term asset than gold or corn futures or soybeans or any company run by a CEO, no matter how august and intelligent they are. They're all just merely mortal. And Bitcoin is something better than that.
It sounds like it. I have no quibbles about that. The more you talk, the more I like that story. I mean, it's not, and again, it's not, we can't, if you want, you can reduce me to just being a trader. I don't think you're trying to do that. But the reality is that it's not about the level of inflation. Never has been, Michael. It's about the rate of change of a price basket of things that are inflating. And that's absolutely what Quad 4 is. Sometimes it's deflating, sometimes it's inflating. You'd have to be a certified idiot to say that oil at a negative oil price, which it was in Q2, which impacted, again, the price of Bitcoin was hostage to Quad 4. This is obeying the laws of thermodynamics. It is the secret to the universe. It is calculus. It's rate of change. So again, I think, and it would be great that if Bitcoin bulls who have the long-term story nailed down would just cede that point. The rates of change, it's not unlike the weather. The rates of change of growth and inflation absolutely impact the price of Bitcoin. And if people knew that, you'd have more people, less concerned or worried about buying Bitcoin because they'd have the confidence to buy it during a hurricane. A hurricane or Quad 4 conditions is when you have disinflation. So I don't know how somebody would refute that. Can you?
Well, Keith, like once I understood Bitcoin, I would go to bed with anxiety at night feeling short because I worried that somebody else would figure out what I'd figured out and they would buy it all and I wouldn't be able to buy anymore. And so once you get something and you look out decade or decades, the only issue is, how do I buy more of it?
Yeah,
like, that's all we're thinking.
So you should be going to bed at night like feeling great about the next Quad 4 is what I'm saying. Why is it so hard to just say that? Like it's like this is just we're using math. We're not using narratives here. We're talking about if you understand that the rates of change of economic gravity, we're talking like 101 thermodynamics here, that you don't have to have those anxieties. Like I have zero feelings about Bitcoin. Zero. And I'm happy about that. That's what I want to store my wealth in. But I want to do it.
Keith, you got to own something, man. At the end of the day, you got a family, you got a company, you got a future. Look out 30 years and try to figure out what you love. Wine, you're going to own that. What's your passion? What is it that you're going to own, that you're going to hold? I would buy into the notion that maybe when, if you got a model and it says Bitcoin is cheap or it's better or whatever, buy more of it. I just think the danger is selling a good thing. Like I'm not very good at selling my things, Keith. I'm good at buying. I'm not. Once you find something that you love, you should hold it, because if you sell it to buy it cheaper, then you're betting that other people that have this short-term model are going to act however they're going to act. And you might be right, but you might be wrong. And at the end of the day, if you're buying something that you expect to go up by a factor of 100, then selling it or buying it this year is going to be plus or minus. Like if you bought like Apple stock at $2.25 versus $2.10, it seemed like a big difference back then. But what if you made the mistake and you were short the share and you missed the next $100 run up? I mean, that's the danger of near-term trading. So
yeah, and the opportunity. I don't think this is a debate about trading. Like if we want to reduce this to you guys are traders and we're the ones who get the long term, that's fine. I've been reduced to I know nothing about long term about anything, including my own company, my own family, my life. I'm just going to get up every morning and do the best I can to understand it and put a risk management wrap around this. If it's truly an asset allocation that one should hold over the period that you're talking about, like forever, there should be some risk management around this thing, should there not? Or it's just because buy and hold is not, Michael, that's not something, that's something that companies and executives have been trying to sell me their stock for 20 years have been telling me to do, and I'm just not willing to buy into that.
It seems to me like every billionaire on the planet got there by buying and holding something, Keith. I mean, tell that to Rupert Murdoch or Warren Buffett or Jeff Bezos or Sergey Brin or Mark Zuckerberg.
What does that mean? Like not everybody's going to be a bit. Like I'm not a billionaire, but I'm certainly not worth $1 million. I did that. You're talking to a guy that understands. I built my company 13 years ago, and I bought and hold it. I get it. I totally get it. But I would not.
So why would you tell the average person that they ought to trade everything 1,000x?
I didn't say that.
It's a lot of work. It's very complicated.
I actually didn't say that. I said that.
The tax code is very hostile to that.
I didn't say that at all, actually. What I said was, if you believe in Bitcoin like I do, You know, I bought the living daylights out of that in April and May. If you believe in it, why don't you understand it so that you don't buy it at a bad price? There's nothing.
If you believed in it, you wouldn't sell it.
Yeah, that's fine. I mean, I don't have to believe in it the way that you do, but I'm trying to say that there is a better way to buy it. And in a level of awareness on that, I still haven't heard why economic gravity does not affect Bitcoin.
Okay, so my point here is that if you're a professional trader and that's what you do, or if you spend 10, 20, 30 hours a week and you devote the effort to it, and if you've got all the offsetting positions and you can manage the tax issue and you've got all the platforms, then maybe you can do something there. The average person doesn't have the time, the wherewithal to do it, and the tax code is hostile to moving in and out of positions. I mean, one of the most intelligent things you can do is just buy something and wait for 10, 20, 30 years because all your gains accrue tax deferred. And so telling the average person, like I can't go tell my father, I want you to go and study up 20 hours a week on trading strategies and take 50 different offsetting positions every year. What I can do is say, Dad, buy a bar of gold, put it under your mattress. And that's what he would have done 30 years ago. Now we have a better idea. You can buy a bar of Bitcoin and you can put it in your hard self-custody wallet and you'll have it and no one can take it away from you. It's a investment strategy someone can execute.
Yeah, 100%. I agree with that 100%. I mean, what I'm trying to articulate is the very basic concept of a drawdown of your capital. You know, so again, you can buy it at 19,000, or you can buy it at a much lower price when Quad 4 hits. And I mean a much lower price. We're talking about significant drawdowns. It's not like you can just everyone can pile into it at today's price and has that duration, Michael. I mean, especially if we're talking about the billionaire who's going to be dead in like 10 years, he might think about, okay, maybe this is something I should risk manage.
Well, there's the dollar cost averaging observation that if you continually sweep your excess cash flows into an investment portfolio that's going to be a hedge against true asset inflation, then that's a wise and rational strategy for a mere mortal. Yeah. I don't think it's for a company or for an individual. I think sweeping your excess cash flows into a basket of treasury assets that are going to appreciate in price as the monetary system expands is rational. And if you try to time that, you know, maybe Bitcoin is trading at 19,000, so you don't do it, so you wait for it to come back. And then maybe it never comes back and it goes to 100,000 and then you lose 5x your money and your money gets inflated away to nothing because you were trying to be cute. And so when I make an investment, I know there's a 50% chance that I'll be wrong in the next 12 months. Like we bought some Bitcoin, it traded down. What did we do? We bought more Bitcoin. You know, and then people they all get all worked up over it. You know, 7 days after you did this trade, you didn't make some money. Well, I didn't buy it to make money in 7 days. I bought it to hold for 30 years. Yeah, so why don't you come back to me in 30 years and call me an idiot at that point in time? And it all comes down to time horizon. You're thinking about 12 months. And by the way, Keith, in 12 months, you're probably going to beat me on every single trade. I'm an idiot when it comes to figuring it out in 12 months. In 10 years, I think I'll probably be right, but I made the trade because when I looked out 30 years, all the noise dropped away and I said, over 30 years, I don't want to be holding government bonds. I don't want to hold corporate debt. I don't want to hold a bunch of big tech equities that are already highly appreciated. I don't want to own gold. I can't figure out what to buy. And I found this thing. And I think it's just extraordinary that we even have the opportunity to buy it at this point in time, because 10 years ago you couldn't.
Yeah, I mean now, and that's when I got interested in it, when the options started trading, I could actually measure and map the volatility in terms of how people are, it's not just about the volatility of the asset, it's actually about what people are betting on the future volatility of the asset, which people have perpetually been making the wrong bet. Really since, if you go back to 2017, that's when we were in what I call economically quad 2. This is what Bitcoin people should be really excited about when you have both growth and inflation accelerating at the same time and the dollar is getting decimated. Now, there's plenty of scope for the long term, which is why I'm most interested in Bitcoin over the intermediate to long term. Guys, pop up slide 88. The long-term chart of the dollar, I don't know if people who are hodlers or not understand what that is. I've been reduced to a trader, so they might as well be called something. I mean, it's what it is. I mean, the U.S. dollar can get annihilated from that level for many of the reasons, by the way, that you mentioned, and are the 13 years of reasons why I built this firm, because I do have a passion to explain this. There's a passion in explaining that economic gravity and the rates of change and the secret to the universe of calculus absolutely matters, Michael. That is my passion, and that is my edge, and I am not some hokey trader. That's what I think is the big opportunity in Bitcoin, is by the time you get to quad 2, which is going to be here imminently here in the next 3 to 6 quarters. Bitcoin could go to 40,000. I don't know what the price is. I think it'd be arrogant to actually say what the price is, because it's more about the momentum of the price. Because the momentum of the upside of the price reflects the economic conditions. And that's something that I'm going to try to explain to people over. I think it's a little lazy for me to say that I'm going to try to help people risk manage assets without an intermediate to long-term view. But that is my intermediate to long-term view on Bitcoin, and why on dips I absolutely buy it.
Keith, I think that everybody would stampede to Hedgeye, and we'd all be subscribers if you started publishing charts that compared Bitcoin to gold, silver, Apple, Amazon.
Yeah, we
S&P
do. We do. That's why we have so many subscribers. And I'm going to do it more systematically.
I can't find them, right?
Yeah.
So, for example, start to show me some charts that are comparing liquidity and volatility and return of all those assets to Bitcoin. I think that there's a vacuum. Everybody needs that.
Yeah, 100%.
I mean, they all are looking for that. And you and I agree on one thing. There's a $250 trillion ocean of assets. They're all looking for the ideal store of value right now. I believe that the obvious question is, how do we explain to people that Bitcoin is digital gold? It's a better gold than gold, and it's a better store of value than big tech. And we can show them with numbers and we can show them with narratives. But as that happens, then a lot of that monetary energy is going to flow from the asset ocean into the crypto pond. And everybody that makes that transition is going to benefit. So it's a chance to do good for the world.
Yeah.
That's why I'm on your show. I think if you wanted to make all of your subscribers, very, very successful, I think educate them on the trade-offs between Bitcoin and those other assets, because there's a vacuum there. And I don't think anybody is really printing those charts. I don't see them. If I saw them, I'd be tweeting them.
Yeah, well, because I don't like anything that has a value. Are you going to give me your Bitcoin for free? No, I'm not giving people that for free. So it's just like any good software. It's research as a service, and that's
they'll sign up for it.
Yeah, they already do.
Why don't
it's
you
not
give
like
me
we're
a little
some
and
fringe firm. We have what we do, Michael. It's simple.
Yeah.
It's a price, volume, volatility visualization of not just Bitcoin, but it versus the alternative asset classes, fully loaded with the volume piece, which is the flow. Yeah, absolutely. That's what I'm talking about. That's why a lot of my subscribers are quite interested in this discussion, and they often are, where you have somebody who's longer term, and I'm trying to help people manage the immediate to intermediate term around that long-term view. So that's what we do, and I will. I'll send you plenty of that, and maybe we will just make it for Bitcoin subscribers a simple subscription. You should be aware of what the price, volume, volatility numbers are daily and across durations. It's a trivial matter to me, at least in terms of how we distribute it.
Keith, I can't find any place where I can go online every day and see these rolling volatility return comparisons.
Right.
If you gave me one static chart like that, I would blast it to the world, and you put a link back to Hedgeye, and then all those cyber hornets are going to go from buzzing around your head to becoming your friends, because you're going to be providing them with the information they need to explain why Bitcoin is a great treasury reserve asset to everyone that's still trapped in gold and silver and bonds and
well,
inferior
the only problem with this information is the point that I've been trying to make, and because you can't visualize it because you don't have it, they don't have it in front of them. I have it in front of me. I write it down every day. It's in obviously predictive tracking algos every single day. I've been trying to say that when you see the flow of it all, you will notice very quickly when we're entering a quad 4, and that will be for the Hornets like a big can of Raid, and that's all it is. It's a risk. And I don't know why, when you're looking at the price volume volatility into the pending economic conditions, again, I equate quad 4 to any kind of an avalanche or something that, again, in phase transition terms, would, again, change the phase of what we were in prior. You will see that. You will absolutely see it, and then maybe it'll be easier for me to communicate why the quad 4 actually does matter to Bitcoin. And if it stops mattering, we'll see that too. I think it's an important thing for people to be aware of.
Yeah, people that understand Bitcoin are owning it. They're not trading it. I mean, if you told everybody that owned Apple stock to trade it in 2013, they all would have lost money. I mean, in fact, all the big winners, Apple, Facebook, Amazon, Google, you would have lost money if you'd ever traded them at all in the last decade, because you never want to be shorts. Right? Look, maybe if you perfectly traded them and you shorted them going down and you went long on the trough, maybe if you're a genius. But I can't figure that out. I mean, I can't recommend it to conscious to mortal.
I can't figure out the company that you created that you became a billionaire with, and you can't figure out my predictive tracking algos. I got it. But at the end of April, or at the end of August, for that matter, there are plenty of opportunities where you could have risk managed Apple, and that's what we're really trying to help people with. It has nothing to do with like, oh, I missed it. I don't have those kinds of anxieties. I just want to get some questions on, because my questions are probably not as good as the crowd, particularly those that are fully engaged in Bitcoin here. Daniel from Alabama. Won't central authorities, central banks, BIS, IMF, realize Bitcoin's threat to the existing order once it gains more widespread adoption and try to outlaw it, or are they too late?
I think back in 2013 when I was tweeting I was going to go the way of online gambling, we were thinking that might happen. But there's been a bunch of regulatory bricks that have fallen in place in the past 7 years. The IRS gave it commodity tax accounting. The OCC has made it possible for banks to custody it. There are crypto banks coming online. Fidelity's endorsed it. All the other governments in the world are generally deeming it an asset for tax purposes, as opposed to a currency. And I think that if you look at all of those things in their entirety, they imply that Bitcoin in particular has been accepted as an asset. I think that there's some other cryptos that purport to be extreme privacy. They're going to have more regulatory challenges, but the regulators, as far as I can see, have come to terms with Bitcoin. I think that would be a reasonable concern 2, 3, 4, 5, 7 years ago, but I think much less so today. I mean, if you're really concerned about alternate asset, gold is $10 trillion. It's a much greater threat to like a reserve currency than Bitcoin at $200 billion. So
how about
I'm not worried about it.
How about like our chief demographer, the guy who coined the term millennials, Neil Howe, he says this all the time, but he thinks that it's such a good technology, and I do too, that the governments are just going to steal it and everybody's going to have their own digital currency, and that'll take share from Bitcoin.
No, I think the governments will have digital currencies, but the problem with the government digital currencies is they keep printing more of it. Right. And the genius of Bitcoin is there's nobody on Earth, and there's no group of people on Earth with a gun to their head that can figure out how to print more of it, even if they wanted to. So what's valuable is not the technology, it's the consensus rules that make it impossible to create more than 21 million Bitcoin. Yeah. Everybody expects the dollar, the euro, and the Chinese, yuan to expand, even as a digital flavor of it.
Do you think, and this is another question from Brett, and it's part, I'll ask a question of mine, part and parcel with this. Like, for it to become its own widely adopted currency, even in terms of at the government level, do you have to have any more transparency than what's already been revealed? Like you said, the supply is perceived to be fixed.
Keith, I think there's a misnomer when you call it a currency. It's not a currency any more than gold is a currency. It's a bar of digital gold. It's an asset right? So for it to work, the typical person, they want to buy $1 million worth of gold, has to buy 400 ounces of a bar in London, good delivery. That's 800,000. Well, you can buy 800,000 worth of Bitcoin, put it in your hand. It's not a currency. The tax code is hostile to it as a currency. You wouldn't want to spend it as a currency because every time you take delivery of it or spend it, you generate a tax event. It's just an asset, right? So having said that, now what's the rest of the question?
Well, that was his question. I don't think it's a currency. I think it's an asset. And I think it's like commodities. It's an asset, which we've already debated, which you don't agree with. But again, I believe it's an asset.
And once you understand it to be an asset, then things get simpler, right? I mean, all the criticisms of it, like, oh, it's not fast enough, it's too expensive to use, blah, blah, those go away because I'm just buying it to put in a vault for 13 years.
Yeah,
I got one transaction,
that's why I liken it to wine.
Like your one vault,
because I have a massive vault of wine, and it's an asset. I don't get emotional about it. I drink it. It's fine. I think it's an asset too. I mean, we agree on
Keith, a lot of people don't understand that about Bitcoin, and it's helpful to educate them that although people call this stuff cryptocurrency, it's not. Right. It's a crypto asset. Cryptocurrency is Tether and DAI, and those things are much more threatening to a government because they compete directly with the government's dollar or the euro. And so when you separate them, it's clarifying.
Yeah, I agree. So Sven in DC has a little bit more of a question on that, on Bitcoin, the asset, and it really has to do more with the mining and the cost of the asset. Like, what if Bitcoin price does not keep up with the mining costs? I've heard this question a lot, but is there a simple answer to that question?
The network's designed in a genius fashion that the miners have a fixed investment in SHA-256 equipment. The only thing you can do with that equipment is provide security to the Bitcoin network. So you can't repurpose it for anything else.
Right.
So once you've actually made that investment in mining equipment, you're going to run that stuff until the variable cost of doing, until the price of Bitcoin is below the variable cost of the mining. And you might still continue to run it because you're getting subsidized electricity and you've already sunk your money in your mining equipment. So it's a beautiful thing because the miners are providing security and they've got incentive to keep mining whether the price goes up or the price goes down. In the extreme case, Keith, where the price goes way down, when it goes to half of the variable cost of the mining, then the miners that are paying the highest marginal cost for electricity will just go offline, right, and the network will shrink, and that will make the rest of the miners more profitable, and that will cause the system to reach a profitable equilibrium, which is what keeps it healthy in a homeostatic way.
Mm-hmm. Okay. Last question, just because we're running out of time here. Unfortunately, I could talk to you all day on this if you put up with my questions. But the other question has to do with, and Raul Paul and I got there eventually too, which is like, what are the catalysts to increase the flow? So again, when I look at any asset price, I care about the price, the volume, and the volatility. We've talked about that. But just to get the flow, he mentioned, look, listed on prime brokerages so institutional investors can actually put bigger institutional dollars behind it. Also talked about ETFs and their manifestation affecting, obviously, implied volume and flows that way. Any other thoughts on that? Or if you agree with that, by the way, I don't know if you think that that's a good or a bad thing.
I think that when the next 5 to 10 billion-dollar entities, either billionaires or billion-dollar investment funds or billion-dollar corporations, when they take a material position in this, the dam's going to break. Then everybody's going to realize that this is, in fact, digital gold, and this is the Facebook of monetary networks, and that's going to create a flow. I think that that the other thing is what you could do, which is to provide really good comparisons of volatility, return, and liquidity of Bitcoin versus all the other alt assets like silver and gold and big tech. I think that'll be a big thing. There's a lack of information on that, Keith, and there's a lot of misinformation. The typical Bitcoiner says, oh, we're really volatile and it'll probably be a 90% drawdown, get ready. And if they actually had statistics over the past 90 days or 180 days and people looked at those, they might come to a different conclusion. I think the third thing is all the institutional on-ramps. As the prime brokerages and the banks come online and people allow you to borrow against Bitcoin, generate yield on Bitcoin, when it's possible to buy $500 million worth of it in a 5-minute phone call, and and just wire it, and it's easy. I think that'll be a big catalyst, and those are all kind of straightforward. I mean, they don't feel like they're that far away to me.
Yeah, I mean, GLD is a good example relative to gold. I mean, it certainly increased people's asset allocation participation. That's the other thing, too. I mean, asset allocation globally to gold is just still like 1%. So in terms of just moving the dial versus where Bitcoin is, in terms of cap relative to gold, there's a lot of scope here. I'm just trying to think of the ways that it would immediately be easy for hedge fund or pension fund ABC to allocate for their clients immediately, and I guess that's kind of it. I mean, is there a way, like, if you were to say, actually, maybe you did it. So, what is the best way to put hundreds of millions of dollars? For those of you that don't know, I think the number was over 400 million, right? How do you do that?
$425 million. Yeah.
How much?
You need an institutional. Sorry? We put $425 million into Bitcoin.
Million. Yeah, apologies.
At about 11,101. About $11,100.
It's a good price.
11111. Pretty elegant, right? Better late than never. I wish I bought it at $1. But as I said, it's never too late to correct these things. So you just need an institutional grade prime broker. You need someone that can buy it for you in scale, and you can either do it through institutional grade funds that'll buy it for you in the fund, or you can go direct to exchanges that have institutional grade OTC desks and purchase desks. And there are a number of them. And 2 years ago there weren't so many. I think that 2020 was a big year where a lot of really great institutions are coming online. A lot of really good exchanges and brokerages are coming online, and that will make the difference. I think we'll see more of that in the coming 12 months.
Looking at it today, and again, just through an institutional, I guess, an institutional order, how long would it take to build a $50 to $100 million position without impacting the price?
I think 3 days.
Okay.
2 days to 3 days.
That's a lot better than I thought.
I mean, in that range.
Mm-hmm. And once they start to show,
I don't think you.
Sorry, go ahead.
I don't think you'd want to try to buy more than 30 to 40 million in a given day, in my opinion. But I mean, that will change obviously as liquidity jumps. But that's the range.
Yeah, that would be, so once I can get this down to daily flow charts, which I don't have, I have trending, and that's a different duration, but you'll be able to see these volume spikes, visually. And I think that that's something that people need to see as well, as opposed to just, waking up to a headline that Square bought it. I mean, it would have been very evident to anybody watching it volumetrically that they were buying it. And, it's just something to be aware of in addition to all these other things.
Keith, if you looked at the Apple Stock app that ships to 1 billion devices in the world right now, they actually are publishing a number claiming that there's $24.7 billion worth of volume of Bitcoin today. It's garbage.
Yeah, that doesn't.
I mean, 1 billion people are looking at numbers that are garbage, and so there's a great opportunity to print. To publish really high quality volatility, really high quality liquidity numbers, and to compare them to all the other assets that people with billions of dollars are holding as stores of value. That's a great opportunity, and the market needs it. And I think it's holding back Bitcoin, because a person like me looks at this and I'm like I know for a fact you can't buy more than 35 million a day without people knowing. So there's no freaking way that there's $24 billion trading. You guys are idiots to print this shit. Yeah. It's just awful. But where can you find something that is so incredibly compelling, that's got such bad data around it relative to alt assets? So there's an opportunity there. But likewise, some people look at it and they say, oh, well, that's why I won't buy it, because it's immature. I look at it and think, I love the fact that the data is a little bit immature and the on-ramps are a little bit difficult, And it took me 6 weeks to be able to set this up and another week to do this. I love that because that means that's the pain and the work of being first or being early.
Yeah.
And that means that as we fix those things, everybody else follows and they will follow and support the thing. And you're ready to be, you're better off to be the first unpopular person doing something and have 99% of the world not understand it than to do something when everybody understands it and agrees with you.
Yeah, agreed 100% on that. Well, we've actually agreed on a lot of things and had some good conversation here. I wasn't looking to get, some kind of like cheerleading session or anything like that. I was just looking, like, again, like you said, the educational component to this conversation, at least to me, was highly valuable. I think, seeing some of the feedback in the queue, it's been tremendously valuable to a lot of people. That a lot more people need to understand this, and including me. And I think I'd humbly submit, including a lot of people who own it as well. So thanks for making the time and being so transparent and accountable about your position and how you think about it, and unapologetically supporting your position, which you obviously should.
It's all about education, Keith. Happy to be here. Thanks for allowing me to be here.
Awesome. Thanks. He's Mike Saylor, and I think we're probably going to have a conversation again sometime soon. Thank you. Thank you for joining us.